It's time for a recurring theme that keeps on happening in assets Ind AS. We had discussed this thing in Ind AS 16, then we discussed this in Ind AS 38, and again we are discussing this under Ind AS 116, and that is the principles of subsequent measurement. Ind AS 16, Ind AS 38, both are very clear that you have to recognize an item of PPE or an item of intangible asset initially at cost. Once you have recognized the item at cost, after that you have a choice. Either you can follow the cost model or you can follow the revaluation model. Similar thing is there again under Ind AS 116. However, Ind AS 116, instead of offering a choice, suggests that please follow the cost model unless and until you decide to follow the revaluation model. So the preferred model under Ind AS 116 seems to be the cost model, but still it does not rule out the revaluation model. So under Ind AS 116 also the same thing will happen. If you are a lessee, you will initially recognize the ROU asset at cost. What are the items that will be included in the cost? That has been a subject matter of one of the earlier episodes, isn't it? You very well know what will form part of the cost of the ROU asset. So you will initially recognize the ROU asset at cost. Subsequently, you will follow the cost model unless and until you decide to follow the revaluation model. So preferred choice is cost model, but revaluation model is not ruled out. So it says that after the commencement date, the right of use asset, that's nothing but your ROU asset, should be measured using cost model unless it applies the revaluation model as specified under Ind AS 16. Okay, what is the cost model? In cost model, you will initially recognize the ROU asset at cost, then we will provide for depreciation, and in case if there is any impairment, Ind AS 36, right, we have still not discussed it, but under Ind AS 36 we will discuss how we will provide for the impairment of the asset. So impairment loss should be provided for. So to follow the cost model, an entity measures a right of use asset at cost less accumulated depreciation and accumulated impairment losses, if any, of course, and adjusted for remeasurements of the lease liability in the event of lease modification. Lease modification is one major segment of Ind AS 116 that we will be discussing as we'll be moving further. Because of lease modification, the lease liability can change, and the adjustment of lease liability will be made through the ROU asset. Depreciation. We are saying we are going to provide for depreciation. When depreciation has been provided, are we going to provide depreciation on the on the item of the leased asset over the lease term, or should it be for the entire useful economic life? This issue will definitely be there. When you provide depreciation, should the depreciation be for the lease term? Should the depreciation be for the useful life of the asset? Think in this way. There is an asset which has a useful life of 10 years. Okay, but your lease term is for 6 years. I have incorporated the ROU asset at cost. Okay, should I provide depreciation for 6 years because that is my lease term, or should I provide depreciation for 10 years, which is the useful life? This will all depend upon what will you do at the end of the lease tenure. You are saying my lease tenure is for 6 years. What will you do after 6 years? Are you given a purchase option? Are you given a purchase option? Or are you going to return the asset back to the lessor? The answer lies over here. You have entered into a lease contract for an asset which has a useful life of 10 years, but your lease tenure is only 6 years. At the end of the 6th year, I have a purchase option, and it is reasonably certain that the purchase option will be exercised. In other words, this asset will be in my books for entire useful life of 10 years. So although the lease term is 6 years, I will provide depreciation for 10 years. Getting it? Okay. You are entering into a lease agreement for 6 years. At the end of the 6th year, you are given a purchase option. But I am reasonably certain as a lessee, I will not exercise that purchase option. I will return the asset back to the lessor. So this asset will remain in my books for 6 years. I should provide depreciation for 6 years. Depreciate ROU asset over the useful life if the lease transfers the ownership of the underlying asset to the lessee at the end of the lease term, or it is reasonably certain that the lessee shall exercise a purchase option at the end of the lease term. If not so, then depreciate the ROU asset over the lease term. What about the lease liability? Lease liability will be a financial liability. You have to account for it by following the principles of Ind AS 109. Ind AS 109 is dealing with financial liabilities. Basically, you have to treat the lease liability as a loan, as if you have taken a loan from the lessor, and whatever is the accounting for the loan, similar will be the accounting for the lease liability. So finally, what are the items that will get debited to the profit and loss account by way of an expense? What are the items that I will recognize as an expense? You will depreciate the ROU asset, so depreciation will be debited to the profit and loss account. We are saying that we will treat lease liability as if we have taken a loan from the lessor. If you have taken a loan from the lessor, then on that loan you will have to pay interest. So interest expense has to be recognized, right? There are certain variable payments which are not a part of the lease payments. These variable payments will be separately debited to the profit and loss account. For example, the lease is suggesting that for that in a lease tenure, during the lease tenure, whatever is the sales, a certain percentage of that you have to pay to the lessor. This is something like royalty. This will not be included in the lease payments, and that is the reason we have to separately debit it to the profit and loss account. And by chance, if there is any impairment within the meaning of Ind AS 36, then this impairment loss will be debited to the profit and loss account.